The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, it turned into a pretty good money flow day on Tuesday in soybeans, bean oil, wheat trade led by Kansas City wheat, and then the cattle market snapping back a little bit from two aggressive days of selling Friday and Monday. We're going to talk about all that and more. The corn market is the more part. Didn't really do a whole heck of a lot on the day Tuesday. We're going to dive in and take a look at what's going on in the market trade. Joining us for analysis, Jacob Burks with agmarket.net is here. Jacob, good to catch up with you again, my friend. Hope you had an awesome Thanksgiving holiday.
Yeah, it's always good to chat, Jesse. And yeah, it was fun. Had a trip to Arkansas and back, and so come back just in time for this 14-degree weather here in the south part of Wisconsin. So it's a blast.
Gotta love that, right? Just a good testament to the fact that winter is here and or right around the corner for many folks. And we don't want to think about that, though, too much. We want to think about a good day in this market trade on Tuesday. I was starting to worry just with how Friday's low volume day was, and then Monday was kind of ho-hum, and we get in here on Tuesday, and this cattle market snapped back. Let's start with the livestock trade first, because this cattle market has been wildly volatile the last three sessions, and I'm just wondering your thoughts here. I mean, a good recovery day Tuesday led by feeders and live cattle, but you look at how much damage has been done. Man, I don't know where this cattle market goes from here, Jacob. What do you think overall to start?
I think you got to kind of look at this from an overall picture. I mean, you start looking into daily excuses or daily reasons for some of these market movements, and you're going to pull your hair out. Overall, we've seen $56 from the September highs to the lows that we put in yesterday come out of this marketplace, and that's a huge pullback. It's a huge knee-jerk not a huge knee-jerk reaction. That's been a slow, steady move down. And, we have some knee-jerk reactions here as we get to the point where these funds and the positions that they're in, they break some technical support. You see a really bad day down on Friday. You get that margin call. You get that exiting of positions, mass exodus, and you see some knee-jerks. And that's what we saw, I believe, yesterday. And because the way we came back and traded this thing today, started off a little bit lower, and now here we go. We're going to end the day up $7.20. So focusing on that big picture of what's out there, what's taking place, and there's a lot of different reasons, different thought processes behind where this cattle market can go, and I think a lot of it has to do. You have to look beyond the supply side of this thing, look into the demand, and there's just a lot of different possible answers and possible directions that we can go from there.
I thought, after Monday's trade, I was thinking, okay, funds are just getting out of this cattle market. They've had enough. They're going to be out of this thing until the end of the year, and then, reassess as we start a new calendar year in 24. But then, like you mentioned, we came back and bought this thing here on Tuesday, and it felt like we just overcooked it to the downside, so to speak, with some of this technical type trade. But I wonder, have we done too much technical damage to limit our upside in this cattle market? What do you think, Jacob?
I think you just kind of look at what the 10-day moving average has done to this thing on the way down in some of these charts. There's been a lot of resistance there from a technical perspective. I think yesterday's the open interest, the volume was, I think, double what it was on Friday and even Wednesday, which we expect to see low volume trades on those days. But you saw the open interest declining. So you were seeing some exiting of positions as we went through the holiday trade and into the Monday. But I think it was when the markets get dipped one way too far, the reciprocal happens, and it happens even better. I mean, if you look at where we're at on the week, we're actually higher on the week. So it's something that you you have to be very patient in these type of markets. It's hard to be, the markets can stay, irrational longer than you can stay solvent. And that's kind of what happened in this case here, especially in the feeder cattle.
How much of a disconnect could this create with all the futures moves with the cash market? What's happening out in feedlot country and at the sale barn this week and more? I guess I would assume it would create a pretty big disconnect considering what reality's been out in feedlot country, but maybe not. What's your thoughts there?
Well, I mean, you look at the live cattle. I mean, you got December cattle trading around 171. I think we settled 171.65 here on Tuesday. You got your cash trading around that 172 level in the South. That's a couple bucks below where we were at the week before. You saw the if you go back to October and see that cattle on feed report where we had larger than expected placements. A lot of those September cattle had come in earlier. You see a lot of the Mexico cattle coming into the inventory. We built the opportunity for these packers to have control, and that's what we're seeing. You're seeing the lack of the smaller kills, but you're also seeing weights come up. So the box beef prices have come down below 300. They're trying to slow the kill down to keep those prices elevated. So the disconnect between your futures and your cash. I mean, right now they're trading about equal. But you'll continue to see what happens in that cash market is going to be more relative to what's in that feedlot and how they are able to manipulate and how they are not manipulate, but how they are able to function through this inventory situation. And we have a little bit elevated inventory of available cattle right now, and that all entails what's going to happen on the backside in this demand picture. We're not seeing a whole lot of opportunities export wise. We are starting to see a lot more of these cheaper, this low quality cattle come in. You're seeing that in the box beef and the spread between choice and select. You're seeing some of that inventory come in, and I think that what we've done from a monetary policy standpoint is starting to catch up, and we've taken that disposable income from that middle class of America and made it a little bit more difficult for them to continue to buy these higher priced cuts.
That choice select spread pushing 30, by the way, on Tuesday. So that's a good point there. I want to get to hogs at a second to wrap up the livestock conversation, but just cattle in general, with the recent volatility, am I looking still at maybe hedging cattle here, protecting my downside? I mean, risk management wise, talk to me what we should be thinking about right now.
I think if you're in that position where you're in the feedlot, or you've got some small pens of cattle that are going to have to go to town, this today probably makes you at least smile that you say, hey, we got some opportunity that we can catch a bounce here. Now, what I would probably look at is don't be hesitant to go ahead and sell the cattle. I don't know that holding on to cattle right now and putting more pounds on them is right, because if you're thinking about doing it, everybody else is too. And so what I would look at is just somehow, some way, you'll be able to capture that upside potential, whether you're buying them back on the board, whether you're looking at buying some type of call strategy, putting yourself in a position for a rebound. I mean, it's you look at cattle inventories, and if the demand stays strong, and if we're able to, because the whole time we've been asking this for about 6, 7, 8, 10 months now of how in the world is the demand keeping up with the prices that we've withstood. It's not to say that we can't get back to those levels, but I do think that it's not wise for us to continue just kicking the can down the road here and just keep putting more pounds on these cattle. You go ahead and use the tools that are available to look at some reownership strategies is what I would look at in the cattle. Now, there's other things in these feeder calves that you can still look at. Hey, you're probably in some profitability levels, even though you've seen $56 fall off of this, that you might start looking at some type of put strategy or look at some LRP or some of that sort to make sure that, hey, we're not going to end up crashing this thing off and continue to push these cattle forward too early, because we didn't make any more cattle here in the last 6 months, and so those inventories are still going to be tight, especially as we go into the spring and the next fall.
Hogs have largely felt like a follower to live and feeder cattle to me here in recent days. I know we got some different fundamentals working in hogs, but some of the same as well. What would you say to that? Do you think hogs have largely just been a follower here on the whims of the cattle market, or are we watching something else in hogs?
I think that they've been a follower of the cattle. I mean, from a technical perspective, the charts look similar. We've seen some really ugly days going through through the Thanksgiving holidays. But a lot of that comes on the shoulders of what's going on in China as well. You're seeing some of the lowest prices we've seen, and don't quote me on the years, but a long time. And you've seen the inventories there just continue to be burdensome. They're not looking to purchase any of our. At one time, we were rallying the hog market based on the potential that their economy was going to be strong enough to where they were going to be looking at buying a lot of our pork, and that just hasn't happened. Just the opposite, that they're having to burden some supplies. So I think that tacked on with the idea that all of protein and all of our entire protein perspective, whether it's the chickens and or the beef or the pork, is just become maybe where our dollar bills are not going to be spent, and that's going to be part of the inflation that is going to start pulling this thing back down if we can get that controlled.
We are talking today with Jacob Burks from agmarket.net here on the show for our market analysis. Jacob, let's go over to the grain and oilseed trade on Tuesday. And you mentioned the economy, the dollar lower had to help out with a lot of our money flow across the board on the day, Tuesday. Soybeans and KC wheat, bean oil too. I'll throw bean oil in there. Kind of the upside leaders on the day. In terms of the soybean market, I know all eyes are on South American weather right now. That's still the big factor here, isn't it?
Oh yeah, it's South American. When you start seeing the market move every 6 hours, when the forecast models generate a new run, you're in the middle of that true planting weather market, and it's something that happens twice a year now, more so than it ever has. But you're looking at the type of size of crop that the entire South America has grown to over the last 5 years. It makes it very important to what goes on as far as the weather models down there in South America. But I would say as we go forward here, that will diminish. You're still well behind pace. I think this is the slowest pace that we've seen since 15 or 16 for Brazil. There are some scattered thunderstorms that's forecast here in the Mato Grosso area, and supposed to dry up here in the southern part of Brazil where they've had too much rain, and we've pushed the delay of the safrinha crop planting down the longer it takes for us to get these beans planted here in South America. So all that said is, when you look at what some of these other private analysts have backed up on the Brazilian corn and the Brazilian soybean potential, you're still looking at a very, very large production area. So with a 15% stocks to use here domestically in corn, and a little bit tighter supply, but a ample supply of beans here, you're still looking at some supplies that are not going to support a major rally unless these weather problems continue through the growing season. And I think that's what, when you start looking at some of these forecasts that are 30 days out, we're not as worried right now with the forecast that the growing season will be halted. Just right now, we're worried about the planting and the delays.
Wheat markets were higher too. I know we set new lows in wheat on Monday and then bounced back. KC wheat led the way. I'd heard some rumors in the trade about some historical buy signals in the wheat trade on Tuesday for the date of November 28th. I don't know how much you heard about that, but I found that an interesting little nugget as the wheat market rallied a little bit on Tuesday.
Well, that's good. We could use some reason to buy wheat, because that's about the best thing I've heard so far. Maybe I had my nose stuck in the cattle too much today. But I didn't get that one, but I'll buy it, man. I would love for anything to see this wheat get some support here. We've seen long-term downtrends just continue to cap us out in the wheat. You come in here on a day where we had a good bounce here December wheat-wise. You look at all the corn, beans, the wheat. You got first notice day coming up. You got the wheat, as a matter of fact, has got December contract is twice as big as we were last year in open interest. So you do have that. You see the kind of a bear spread here in the corn and beans today in the mill, because that first notice day coming up, these guys want to get out of this long contract before delivery. So that's kind of weighed on the front ends of the bean mill and soy and corn today. The wheat was in the same way. Even though we were up 9.5 cents, we were still 2 cents less than what we were into the March contract. So long story long, there's factors in that wheat contract that are going to limit it on a big move up. The other part is we come out with 2% better, good to excellent numbers yesterday. So every time that we look at potential China buying or potential opportunities to catch a bounce, we've just found an opportunity to cap that and not get anything sustained here in the wheat.
I saved King Corn for last, Jacob, because out of all the good things we saw on Tuesday, corn just laid an egg. Didn't do anything. I know we set new contract lows in D's corn. I tell you what, I think a lot of folks are getting ready to, if they haven't already, they're locking that bin full of corn at this point because this corn market's just not wanting to do anything right now. Jacob, what's your take in this corn market right now?
You're exactly right. I mean, when you start setting new lows, you haven't been this spot since 2020, 21 timeframe. You're back down to 450 levels. You're $1 lower than what a lot of people were guessing that we would end up, averaging this year out here this time of year. I think that the trucks are locked too. They're not going to start those trucks up. They're not going to haul grains, up here in this area for a while. Basis is going to have to do the work, and we did hear some rumors and scuttlebutts about some of these processors and some of these opportunities, to get that the corn moving a little bit. But all in all, we're on a long-term downtrend that looks to be supportive right now. We closed above it here in the March corn, and so if you go back and look at anywhere from that May to July lows, and you draw that line across there, there's some solid support here in the March now. It wouldn't surprise me if we continue to see this market fall off and go below the 450 level in the December. But I don't think that at this point we have that extra push that was going to from the farmer selling that is going to get us there. Now, what my fear is if you look at what the commercials are short from a contract perspective, what these commercials are holding, it actually decreased this last report, and we don't have enough farmer selling. And there is a lot of farmer selling to come. And that's why I feel like in the future, maybe it comes after the first of the year when people are wanting to get that, open the bins up and get paid, get that deferred pricing, that we start seeing some of that even push us a little bit further. So, between now and then, I hope we can get the basis to do the work to get us to an increased level where we can get a little bit more risk management, get a little more sold.
Jacob, final thoughts, anything else on the grain side, risk management wise, or anything else you want to reiterate for folks here today before we run out of time?
Well, I guess what we could, focus on a little bit is hopefully you've been able to get some risk management done. Hopefully you're not one of the ones holding too much unpriced corn in the bin or beans as well. But go out there and look at 2024 stuff. You're trading over $5 in the futures. You're trading back up to $12.93 today in the November contract. To save time and not to get too detailed on ideas and thoughts of exactly what to do, I would just say you need to be talking, considering, and looking at some risk management strategies to protect $5 futures. And if we get to 13, maybe you can that can be one of your best sales of the year. So be aggressive and looking at some type of strategy that can put you in a spot where you're not selling something a lot less.
Jacob, if folks got questions, want to talk to you about risk management, I know they could do that very easily. How can they get a hold of you and the agmarket.net team?
First of all, we encourage everybody to go to our website and take a 30-day free trial of our intel. You can get on there. You can see what our thoughts are and treat you just like one of our customers. There you can look at the About Us portion and find any one of our brokers, and our phone numbers are listed there. So shoot us an email, find us on social media, whatever you got to do. Let's chat.
Agmarket.net. With that, Jacob Burks, thanks for joining us here this week on Market Talk. We appreciate it. We'll talk to you again soon.
Hey, have a great week. Thanks for having me, Jesse.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.